welcome to another video from Creativo Solutions. You're watching the Accounting for Non-Accountants video series. I'm Anthony and I'm here to help you with all your accounting questions. Please post questions and comments below telling me what information you want about accounts to help you better understand it for your professional life or for passing your exams. Please subscribe to this channel and visit the website for more content and resources to help you. Today, we're going to expand on the financial position. We were introduced to this concept in the previous video, and now we're going to be looking at all of the different components in more detail. We're going to be discussing assets and liabilities again. The first definition that I have here on this screen is the definition for an asset. Remember, we spoke about the International Financial Reporting Standards, IFRS. These definitions have been summarized from IFRS purely because they're universal. Everyone that views an asset will have a particular definition for it. So the definition for an asset is a resource controlled by an entity from a past event that will lead to future economic benefits. That's how we define an asset. It doesn't matter what the asset is, so long as that particular account represents that definition, it will be considered an asset. So we need to look at the definition and we need to be able to identify what meets the definition and what doesn't meet the definition. We need to also determine why is it important. Well, we spoke about accounting being a language. If accounting is a language, we need to express ourselves correctly and we need to communicate the information correctly to our users. Remember, users are going to be making use of the financial information that's contained in the financial statements, and they're going to be making a decision based on that. So if I'm looking at why is it important, I need to remember that it's just a language of communicating finance or business. It's a way to represent information. Can I record it as an asset? So the account that I'm analyzing, can I record that account as an asset? And can I disclose that information accurately? Because if it is an asset, I then need to disclose that information to my users. So it's very important to understand the definitions. An asset is a resource controlled by the entity from a past event that will lead to future economic benefits. Here we have some examples of different assets. We're going to be looking at each one and we're going to be relating it to the actual definition. So if I look at the first image on screen, that's a picture of a delivery minibus. So if I'm looking at that delivery vehicle as being an asset, the first question I need to ask myself is this delivery vehicle a resource? The answer would be yes. Then I need to look at, well, do I control this resource? i.e., has the company or business, did they purchase this particular vehicle? And is the company the owner of that particular vehicle? If that's the case, then I can say yes, it's a resource that we control and it arose from a purchase. Now I need to think about the future economic benefit. Well, if I've got a vehicle that I can use for delivery, that vehicle is going to generate future economic benefit every time I deliver goods to my customers. So the vehicle would definitely be considered an asset because it's a resource controlled by the entity that would have arose from a prior event that will give rise to future economic benefits. Let's have a look at another example, the mobile phone. If I look at the mobile phone, I need to determine, is it a resource? Yes, it is. Do I control it? Well, it's my mobile phone, so yes. Did it arise from a past event? Well, you would have purchased the mobile phone before owning it. Are there going to be future economic benefits? Definitely. Every time I pick up the phone to make a call, I'm using that particular device, and that device is providing future economic benefit. Those particular mobile phones would definitely be considered equipment rather than something like a consumable that we would dispose of, purely because the duration or the lifespan around that particular asset is a lot longer. Okay, if I'm buying something that will be used in the short term, it's generally not considered an asset. Right? You don't buy phones daily. Right? we might replace a mobile phone every year, every 2 or 3 years, depending on technology and depending on the company's requirements. So if I look at all of these assets on screen, all these assets meet the definition of an asset. All of these assets, we've got the tractor, we've got the laptop, we've got cash, and we've got property. All 6 of these images meet the definition of an asset. They're all resources, they're controlled by the entity, they arose from a past event, and they'll all give rise to future economic benefit. That's important, guys. Knowing the definition is key to being able to identify different assets. Remember, transactions will arise, and it's our responsibility to interpret and analyze that transaction correctly. And the only way we can do that is with the rules. And the rule that we're applying here is the definition for an asset. On this slide, just to summarize again the concept of the financial position, we spoke about this in detail in the previous video. So if you haven't watched that, please go back and look at the video covering the financial position of a business. In this particular video, we looked at an asset specifically. We know what the definition is. Are all the assets going to follow the same rule? The answer is yes. All assets must follow the accounting rule because they're assets. And if they meet the element, in terms of criteria, in terms of definition, they have to follow a specific rule. So if I'm looking at assets, assets will increase on the debit side with the plus. Okay, the plus is on the debit side. And assets will decrease on the credit side. So if I give you a simple example in terms of, let's say, an asset that I'm going to be purchasing. Remember, all transactions will always have a debit and a credit side. We will look at more examples in a future video. Please come back to the channel and watch a later video where I'm going to be taking you through examples, specific examples covering specific transactions. So if I look at that example now in terms of purchasing an asset, let's think about the asset and what's actually happening to it. So if I'm going to be buying a vehicle, we spoke about a vehicle earlier as being what? An asset. So we know a vehicle is an asset. If I'm going to be buying another vehicle, am I increasing or decreasing the amount of vehicles I have in the business? Well, the answer would be an increase. So if I'm increasing the number of vehicles in the business, what is happening to that account? Well, the account being a vehicle is going to be considered an asset because it meets the definition. A resource controlled by the entity from a past event that will give rise to future economic benefit. So now I know a vehicle is an asset. Now I need to determine, well, what do I do to this account? Do I debit the account or do I credit the account? Well, what did we say we did? We purchased a vehicle. So if I'm buying a vehicle, the asset account must increase. So therefore, I'm going to have to debit that particular account. And that's only the one side of the account. We're only focusing on the assets. We've come to the end of this video. Please subscribe to the channel and leave your comments below. I want to hear from you what you think about assets. Are you comfortable with the definition? Would you be able to explain to someone what an asset is? Let me know what questions you have about this particular video. Please post those in the comments below and subscribe. Thank you for watching.